Stock slip after the strong run in the past week ahead of the Federal Reserve rate decision tonight. The IT sector drags while utilities and capital goods hold their ground. Mid-caps outperformed today. The management of PI Industries says that it sees no impact of growing competition in a key molecule as patents in most markets continue, while Canfin Homes clarifies there has been no new fraud incident and it is tightening its controls. Axis Bank slips after 33.1 crore shares worth about 3,500 crore rupees change hands, with Bain being the likely seller, while Suntech Realty takes a knock after near 5% equity changes hands and trades worth over 330 crore rupees. Crude oil prices drop sharply on concerns that the OPEC plus output cuts won't be enough to avoid oversupply as US, Canada and Brazil ramp up output. EIA cuts its 2024 Brent prices forecast by $10 per barrel. COP28 impasse ends, agreement drops phasing out of fossil fuels as leaders agree to transitioning away instead. Now, this will be done in a just, orderly and equitable manner in order to achieve net zero by 2050. Hello and welcome. You tuned into Business Lunch. I'm Nisha Podar. With me will be joining Pavitra Parekh. Let's take a look at the markets. Well, the market is consistently distancing away from its all-time highs of 21,000 levels, and that is on account of all forms of profit booking that we are really seeing, whether it be share sale or even PE exits that we have been seeing, and that have been the theme. Now, Nifty 50 at the particular moment is down 81 points, 20,826 levels. Remember that it is 100 points below its opening price. On the other hand, Sensex has lost 262 points at the current moment, 0.37% down, though there has been a slight bit of uptick in the last few minutes of trade that we have seen, so little bit of let up in the market. Bank Nifty is trending flat at the moment, absolutely flat on that particular counter, though we must note that the heavyweight HDFC Bank, that is really not contributing, down 4% in trade. Mid-cap is the spot which is now jubilant today. Compared to the rest of the market, it is still gaining in the green, and lots of mid-cap universe stocks are really gaining in trade or backed by a lot of news flow. But IT is having a bad day today. Pavitra.
Oh, absolutely. You know, like you said that IT is under pressure, but the mid-cap, small caps, a lot of those broader market stocks are doing quite a lot better. You still have the advances which are outpacing the declines. I want to point out that the small cap index is at the high point of the day. From the lows of the day, it's put on 0.7%, even when the market has seen quite a slip in terms of what we're seeing on the Nifty. You know, adding to the IT point that Nisha was making, let's just pull up a few of those names and you can see the kinds of cuts that have come through. These are the mid-cap names, but everything from a TCS, Infi, LTI, all under pressure today. The real estate stocks are also not having the best, of course, after a big run up, but you know, a lot of those names will be up on your screen. But some of those stocks which have been really adding on to the momentum day after day, once again today are doing very well. So take a look at PFC, REC, IREDA, all of these stocks, you know, just adding on even more. But maybe what we are seeing in terms of the frontline index is just some caution ahead of the big event in terms of the Fed rate decision later tonight. So that's the market right now. We're going to come back to this, but first up, let's talk about some of these stocks which are seeing some big moves. Axis Bank is under pressure. This following a large trade that took place in the stock this morning. So Abhishek is here to bring us some of the details. Abhishek.
There was a large block in Axis Bank in trade today. The shares traded were around 3.34 crore, which forms about 1.1% of the equity by Bain Capital is what sources do tell CNBC-TV18. So BC Asia Investment 7 Limited, BC Asia Investment 3 Limited and Integral Investment South Asia 4, they have actually sold their stake. Lockup is about 90 days and, friends on the, investment community do tell me that they still have a 50% stake left in Axis Bank. So details of investors who have come in via the block will be known by end of day today. Back to you.
All right. Thanks, Abhishek, for getting us those details on Axis Bank. Shifting gears then, PI Industries, that remains under pressure as one of its biggest clients, Kumai, cut its guidance for FY24 and Chinese competition enters a key market. Now, earlier today, we spoke to Rajneesh Sarna, who is the joint MD of the company, and he said that he doesn't see near or mid-term threats for the innovators from the recent developments. Let's listen in.
Regarding whether these capacity announcements or some of these generic companies getting into this molecule has any serious threat for the innovator or the existing manufacturer? Absolutely not. And I tell you why. Because in most of the developed markets where this molecule is being selling and which are the major markets for this product also, such as US, Brazil, Japan, and some other countries, these markets are protected. Data protection is there. The current market is, for example, $600-700 million, but the potential to grow is multi-billion dollar. This is the kind of potential. How much is the market which has already gone generic is less than 10%, 8-9%, okay? More than 90% market is protected, and it is protected for next several years. Some countries till 2025, some countries 2028-30, and then there are mixture combination patents which will carry this protection for many more years, even after 2028 and 30.
All right, that is the management of PI Industries. The street, however, not really, taking any of those comments. Well, it's still down 3% after the 10% cut that we saw yesterday. But let's now shift focus to the primary market. Affordable housing finance company India Shelter Finance's 1,200 crore rupee IPO has opened for subscription today. So let's listen into what the management of the company had to tell us.
It's a housing finance company, purely housing finance company with a focus on affordable side. We largely capture tier 2, tier 3 markets for the affordable, and our focus remains on self-employed. So category of customer where the income is between 25,000 to approximately 55-60,000, and the average ticket size for loan remains around 10 lakh rupees. We will cross the level of 2,000 crore plus capital, and that's an important benchmark to have if we have to look for the next level of growth. Obviously, when we had to go to banks for next level of borrowing, we can request rating agency for upgradation also, as we stand today with A+. So this is an opportunity lies as you infuse the capital.
All right, and we are flashing on a screen the agreement that has really come through at COP28. Remember that it is a big takeoff from what they had earlier suggested about agreeing to phasing out of fossil fuel. So it's a big change on transitioning away from fossil fuel, and a lot more now thought needs to be put on that. But it's a huge step down when we talk about COP28 and what has been agreed upon to really end the impasse between the leaders. Now, next on our IPO radar is DOMS Industries. The company's 1,200 crore IPO also opens today, of which 350 crores is fresh issue and 850 crore rupees is via the offer for sale or OFS. Now, earlier today, we also spoke to the management of DOMS Industries to really understand their post-listing plans and why should investors really bet on this company. Let's listen in.
Historically, you will see that we've already, been at an asset turn of 3x plus, and we believe that ahead we would also focus on maintaining this asset turn of 3x plus.
All right, so the market action in this segment also remains very hot. 2 new IPOs opening today. We need to get into a short break, but there's lots more news and updates that we're tracking in just a bit. Stay with us. Welcome back. Let's get you an exclusive opinion now. Fintechs are free birds when it comes to regulations. That's a strong comment coming in from SBI Chairman Dinesh Kumar Khara. Speaking to Lata at the Digital Lending Summit 2023, he talks about the importance of technology and innovation in the banking system. Listen in.
The fintech or the technology providers, they have a major contribution to make. We have seen that over the years, there is an increasing adoption of technology in the banking system. And now we have come to a stage where we are observing the technology being adopted practically in areas which are beyond imagination. I would say that perhaps it's a stage where banking is coming to meet the expectations of the customers. And while doing so, there's an effort in terms of offering the frictionless solutions. Over the years, banks have been accustomed of operating in the regulated environment, where the boundary conditions are very tightly defined by the regulator. And fintech are relatively the free birds. So how to really make them understand that in the financial sector, one has to operate, if I may say so, use the anomaly of a bird and the cage. The boundaries of the cage cannot be oversighted ever. So that is something which I would like to say, that as banker, we can probably hold their hand and probably help them in operating within the boundary conditions. And this eventually, believe me, will lead to the trust creation in the fintech also.
Very interesting comments coming from the largest bank's chairman on the fintech scenario in the country. Moving on to some important global update and an important macro data that the market is going to take cognizance of. Well, the two-day FOMC meeting began yesterday, and the Fed chair will be announcing the policy decision later today. And respondents to the CNBC Fed survey see the Federal Reserve beginning rate cuts next year. In fact, CNBC's Steve Leisman has more details on what's expected.
Rate cuts and a soft landing are increasingly in the forecast, and so is S&P 5000. Just none of it's going to happen perhaps as soon as the market wants. Maybe a couple years for that S&P 5000. Here's the forecast of this. I want to call them this equity curmudgeon group. You can see 4187, so not so great for this year. 4593 now. And then you go and you look at what happens. It goes up to 5,000 or above 5,000 by December 2025. So that's just an 8% gain over those 2 years. This group generally negative on equities. Barry Knapp, managing partner at Irish Times Macroeconomics, says equities are expecting a V-shaped earnings recovery, an outcome that is unlikely with contracting bank credit. Relative to a soft landing outcome, which, by the way, the percentage went up in this survey, 47% say the market's overpriced, 27% say it's priced correctly, and 24% say underpriced. That's about as optimistic as this group ever gets. But take a look, if there's a recession, 91% believe that stocks are overpriced. Looking at Fed expectations, 100% say the Fed will leave rates unchanged this week. 53%, that's where we get our first percentage above 50%. Say that first cut comes in June 2024, moves up to 69% for July. Not as optimistic or as quick, perhaps, as the futures market is. And there's that 453 year-end rate for the funds in 2024. Again, that's above where the market is, looking for about 85 basis points of cuts, not 120. And we're first time we're asking about QT or ending QT in quite a while. November 2024 is the average, but that hides a lot of dispersion here. Respondents are actually all over the place on that. Quickly on today's inflation number, didn't negate the bullish case for rate cuts next year, just perhaps pushed it off in terms of a near or nearest term cut, making the forecast here for June today a bit more plausible. And as you know, we're going to go back and forth as that data come in as to when that first cut might happen.
All right, counting down to the Fed rate decision tonight. Steve, thanks a lot for taking us through that survey. But with that, it is time for a short break. When we come back, there's lots more news updates that we're addressing. Stay with us.
Welcome back. You're watching Business Lunch. Straight to an important global development and the latest coming in from COP28 summit in Dubai. Now, the impasse has ended and the final agreement drops phasing out of fossil fuels as leaders agree on transitioning away instead. In fact, my colleague Sonal Bhutra, who's been tracking it closely, joins in with more details. Sonal, explain to us, what does the two terminology really mean, and is it a huge step back from climate consciousness targets?
Well, it is the first time that fossil fuel has been mentioned in any agreement when it comes to any of the COP. So it is historic in that way, also because a fossil fuel producing country has hosted COP this time around. So to give you the news first up, the COP28 final agreement, it talks about transitioning away from fossil fuels, but it doesn't talk about phasing them completely. And that is the big talking point, because the earlier draft did not talk about even phasing out, and that actually drew a lot of criticism from the European Union, from the likes of United States and a lot more countries. So this comes as a positive update from the COP28 agreement. Now, the key agreements, apart from transitioning away from fossil fuels in energy system, includes something that was expected already. It also talks about phasing out of inefficient fossil fuel subsidies that do not address energy poverty. They are talking about tripling renewable energy capacity, doubling the global average rate of energy efficiency improvements, something that was expected again, accelerating efforts towards phase down of unabated coal power. Also, they talk about efforts globally towards net zero emission energy systems and zero and low emission technologies as well. So the big thing is that fossil fuel, the term has been mentioned in any agreement in COP so far, but it does not talk about phasing away, but it talks about transitioning away from fossil fuel. So that's a big update that has come by.
Right, Sonal, thanks a lot for summing all of that up for us and taking us through the highlights of the agreements. But with that, let's also move on and bring you the latest updates from the political front. BJP leader Mohan Yadav took oath as the new Chief Minister of Madhya Pradesh today. Rajendra Shukla and Jagdish Devda were sworn in as his deputies. The ceremony was held in Bhopal, and Prime Minister Narendra Modi and other union ministers, including Amit Shah, were in attendance. Meanwhile, he had Vishnu Deo Sai, who will be sworn in as the Chief Minister of Chhattisgarh in Raipur at 4 p.m. today. Prime Minister Modi will also be a part of this ceremony.
And more news from the national capital today. A security breach has been reported inside the Lok Sabha as two people jumped down from the gallery and reportedly hurled gas-emitting objects. Now, the Lok Sabha has been adjourned. We are awaiting more details and will get you the latest as and when we get more information on this particular incident. But with that, completely out of time on this edition of Business Lunch. It's goodbye from the team of Business Lunch, but Mid-Cap Radar comes up next, so stay tuned for that.